Today in the crypto space, we see the market still going sideways with a bit of a bias to the downside. Bitcoin down approximately 1%, and so is Ethereum, and the rest of the crypto space following suit, waiting for a nice bounce to the upside, or are we going to continue to the down? In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project, one altcoin, one layer one that has been doing very, very well, and I definitely want to take a look at the chart, and that project is called SUI. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunity. Whether you go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live stream where we talk about crypto news and price action. Guys, if you want to follow me on the socials, the links are in the description below. Feel free to join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the general market. We do see that the overall volume and the market cap right now is kind of stagnant, right? We see that the market cap is, slow dripping down, but still kind of sideways, fine, right? Slightly above the $2 trillion mark. And then we do have the trading volume, kind of hesitant as well. Although we did get a bit of an inflow in the last little while, we're still kind of making lower lows and lower highs here. You can see a clear trend to the downside. So I want to see a bit more volume. Obviously, we want to see a bit more conviction in this market. We want to see the bulls back in town, pushing the prices, pushing the market cap to higher levels. However, guys, until we get those confirmations, we have to understand that this is the market that basically causes people to get bored. Bitcoin is still right around the $59,000, $60,000 level, still doing nothing, and Ethereum doing a very similar thing, going sideways within a structure. And if you scroll through down the market, guys, we'll scrape through the top 100 very quickly before we get into SUI. We'll talk about Bitcoin in a second, just as a quick update, but we do see that the market in general is still kind of going sideways. There's nothing really interesting in this market. This is actually a no trade zone for me. This is a place where within the charts that I would not be wanting to trade. Why? Because both longs and shorts get wrecked, and trading the range sometimes could be very lucrative, it could be very healthy. However, it's very difficult, particularly with the volatility that we've been getting lately. It's not very predictable. There's no edge, and when there's no edge, it's a bit of a gamble, and I'm not willing to take any chances. We have a lot of projects right now kind of hovering around, maybe a 2% dip, 3% dip, maybe even a gainer. Even look at Cashbot doing pretty good, up 2%, give or take. But generally speaking, as you can see, as we see this volatility, this sideways price action, with some randoms like Aptos doing pretty good, making higher highs and higher lows, but you can't negate the fact that today it's down 7%, even though the structure is suggesting a trend to the upside. So this is one of the issues here. And another one is SUI. SUI has been doing great in the last little while, but it is still down 7.5% as we speak. So you can see the volatility is definitely there. Now, obviously, pullbacks throughout the market are normal, healthy, no doubt. But when the market is not convicted, what happens is, even if you are a project like SUI that is going against the grain, the dips will be pretty big because there's not a lot of support, market-wide support, right? The overall conviction and sentiment in the market is not there to sustain the price to continue to the upside. So this could be just a quick profit-taking opportunity or a buy the dip opportunity, as SUI and some others are down almost double digits, 7.5% for SUI. So although I am bullish on SUI, I feel like ultimately, until I get some confirmations that the general market itself is going to show some strength, I'm going to be very hesitant getting into fresh positions, fresh longs on any altcoins at the current moment. As you can see, as I'm scrolling down, guys, the fractals are very sideways. Nothing is showing us much conviction. We had Celestia doing very well in the last little while. It's up 13% in the last 7 days, but it's a 4% dip for today, still within structure, still within a sideways consolidation. And this is what I'm talking about, guys. This is where a lot of individuals start giving back their gains that they may have had in the past. They give them back to the market. So for me, no trade zone for the next little while, hanging tight, doing some research, deep dive research, whatever the case may be, paper trade for a little bit to kind of get a feel for what sideways trading actually feels like. but more than that, guys, it's very, very risky. All right, guys, let's get right into the charts. I know you're here to talk about charts and Bitcoin. Let's begin. Let's see what's going on here with Bitcoin. Ultimately, Bitcoin is, still within its range, hovering around that $60,000 mark. This was the level of support and resistance that I'm really interested in, right around 60,500, give or take. And you can see that you basically entertained this level many times from both a bearish and bullish scenario. Guys, let's take a look at this in a little bit more detail. Really what bothers me is the rejection right here. That really bothers me. And the fact is that we're below that horizontal, and the only reason why, and I've seen other chartists basically put the horizontal a little lower, maybe right around here, and that's fine. That's very doable, of course, because we got a node of volume here that could act as support. But the reason why I put it here is because the majority of the volume in this accumulation, or in this level of market participation, ends right around here, 60,600, 60,500, more or less. So what happens is that below here we start to have a bit of weakness. As you can see, yes, this node is here, but nowhere near as important as all of this mess that we got into this level. And another reason why I like this horizontal is because earlier on, prior to this dip right here, everybody, including myself, was calling this a bull flag. Now, it is still a very bullish scenario here from a big picture perspective. If you start looking at it, impulsive move, descending megaphone patterns tend to break out bullish. We've talked about this many times here on the channel. However, as we are below this horizontal, guys, it doesn't look good. What can I say? And it doesn't look good, meaning that, we could definitely come down, hesitate here, do our thing, maybe even get back up. That's very possible. I eventually do expect that the bulls get back in control, especially as we see signs of bearish weakness. But there's a lot of people thinking that, we could come down and definitely come down to about 44, maybe even lower. I'm looking at the 44 at my worst case scenario here, bearish case scenario, because of the empty space that we have into this level that suggests, that we could fall right through without any hesitation, without much support. As you can see, we got a psychological level of a nice top right here, which could act as support and a nice little bounce. But until, we break the lower low, and remember this long wick, these wicks that we get usually don't get tested again. We haven't got it tested here. We didn't get it tested here. You can see that these wicks over time are kind of not being tested. The buy-ups are strong, the bulls are strong, and so on and so forth. Maybe we do come down and test this level, and then continue to the upside. So until that happens, guys, I have no choice to either be in a bearish state or go neutral and don't trade anything, don't buy anything, don't sell anything. Just hang tight and watch what happens and take advantage of opportunities if we do come down here to buy the dip. That's what I plan on doing regardless, because I do feel like eventually this structure is going to break out bullish. But the question is when. I know that a lot of us are predicting, including myself, September to be a month where we start to wake up, and it's still very possible. And if you look here on the daily, this is a daily, we could definitely get in a few more candles, about 15 or so, maybe a little bit more, a few candles right here to get that nice consolidation happening right into here, and then maybe move to the upside. But again, I would have loved to see this back test, boom, something like that. Maybe not so exaggerated, maybe something like that. Something like this would be absolutely great. Showing similar to what happened here, get back up, back test, boom, spring to the upside. That's what I would really like to see. And you can see that the market did fake us out here once, because we got above and then we came right back down. And this is where, again, a lot of people get scrubbed out, because we go above and below and we're disrespecting the 200 daily EMA many times. And when certain levels get disrespected, it's time to move on, guys. It's time to just say, what? Let the market figure itself out, because until then we have no edge and all we're doing is gambling. All right, guys, let's move on. Let's take a look at SUI. What's going on with SUI? Really, SUI has been doing great as a layer one, as a big layer one, coming out hot with this, in this new cycle of crypto. We're seeing a lot of the layer ones doing fairly well, like SUI, Celestia, many others. Say is actually even waking up as well, doing pretty good. Now we could see that SUI has been getting a lot of volume, good amount of volume right into this area, very concentrated amounts of green price action to the upside, very healthy. However, is this the time to de-risk? And I would say yes, this is not a bad time to say, what, I've done well. Let's measure from the bottom to the top if you happen to catch the bottom, and we'll be modest about this, because even if you got this bottom, you endured this dip, whatever you did, if you got into this level, you're up approximately 90%. Okay, then those are great gains, right? Great gains. We're hitting a wall of volume that could act as resistance based on these tops. You can see that. And if you look left, we got some bottoms. We got a lot of emotional individuals at this level. Now, based on that concept, and we start looking at extension levels, swing high to swing low, you can see that we hit the golden pocket 1.618, very, very close. We're very close by, and the point of control. Lots of confluence in this level. The 200 daily, like I mentioned, is definitely here. Now, does it mean a quick rejection? Does it mean that we're gonna, quickly dump down and come down? It doesn't mean that. It just means that this general level should be a consolidation level. It should be a response level. Now, if the response is strong from the bears, where the bulls are, not, maybe they're taking profit, or regardless, we'll see the price come down a lot harder, and that's obviously concerning. If we see a distribution phase where, generally speaking, we see the bulls just taking profit bit by bit and trying to keep the price propped up before they release all their tokens, what happens is we'll see a nice rounded top and eventually roll over. Okay, so all of this is possible. Now, what's more concerning to me is where this price goes once it rolls over, because right now this is a good TP zone. De-risk, trail up a stop loss, put yourself into some profit and take 10% off the top. This is a great place to get defensive, given the volume and all of that. But once we get rejected, and say we do come down, hypothetically speaking, from a bearish case scenario, we do come down, what we want to do is anticipate that we do come down for a higher low. Now, the higher low scenario, in my opinion, could start kicking in around 80 cents. This is where I would like to see it happen, and this is as low as maybe the 886 retracement down to about 62 cents. Now, of course, we're going to wait for the response from the bears. We're going to see how much strength they have when this happens, and if this happens, of course, because really what's going on right now is that we could get into a bull flag. Nonetheless, we can even still break above the 200 daily EMA, flag it out, get a bull flag, and then continue to the upside. And that would be super, super bullish, because really this retracement has been basically a sideways bull flag consolidation with a continuation to the upside, whereas a retractive consolidation basically comes down and then rallies up. So let's see what kind of sell-off we get. Let's see how much bearish response we get, and ultimately, I'm not saying that we're going to get it right here, but I'm just saying this would be an ideal place to start de-risking, given all the horizontal resistance. Now, of course, we do have other areas that we got to watch out for. We also have to understand it could be a short-term dip, again, back down to about, 85 cents might be possible based on the horizontal supports that we've had in the past and the volume gap. So if we do come down, it may hit some support right around there. And at worst case scenario, like I said, coming down to about 70 cents might be possible, more or less. And that's where I would be ready to reaccumulate and buy some dips if I did take a bit of profits on these tops. Because you can see that right now we're getting a good amount of a rejection right here. Now, let's be real about what really is happening. Volume right into the zone, then we get into another resistance right up here with a nice little volume gap below. So if we can consolidate, offload some bears, offload some bulls that are taking short-term profit, that's totally fine, and then we bull flag all the way up for another move to the upside, guys. That's super bullish. We're up to about $1.50. That's where our next level of resistance is. You trail up the stop loss, you take another 10%, you let the rest run. Now, ultimately, what we really want to see is eventually, let's break into price discovery. I think we have a lot of work to do still to make that happen, because really in one green candle as a V recovery is very unlikely. I feel like coming down to this level here, again, 87 cents, and maybe even a little bit lower for that retracement. We definitely have to see what the general market does, because if the market continues to be boring and sideways this way, there's no reason why we can't see SUI come even back down to the bottom of the range, unfortunately. Now, if we look at momentum and all of that, let's take a look at some of these oscillators, see what we're doing here, because the oscillators give you a good indication of the sentiment of the market. You can see that generally we're now getting into an overbought state on the daily. You can see the momentum is cracking slightly above the 69%. If we get above the 70%, that's when we're in overbought territory, and that's when, generally speaking, we get the majority of the move, right? So that means that what we've seen lately is not even the big impulsive move. The majority of the move happens once we get above the 70% mark. So in the short term, we could expect that pullback. You see volatilities overbought at the current moment. Look at the last time it was overbought, and then look what happened to the volatility. It came down all the way oversold. Now we're oversold, and now we get all the way overbought. And you can see that this is, definitely playing out. Now, do we get all the way oversold once again? That would be the opportunity to come down and buy the dip. It doesn't necessarily mean that the momentum is going to get oversold as well. Just keep in mind that we got severely oversold already. It could be just a confirmation, a back test, out of this, the descending wedge type of scenario, like I mentioned, and then we can get in a better, risk to reward opportunity. Because at the current moment, like if you're going to get into a long position, you can see that the risk to reward is not very healthy. Your invalidation, which is the bottom, is way, way, way too far away. And if we take a look at the trend oscillator, the trend oscillator is still looking bullish, which is great. The EMA is facing up, green histogram bars to the upside. The expansion is ready to continue to the upside. So I like what SUI is doing here, but we just got to keep in mind that the 4-hour for sure is showing us a bit of a signal that we got to be careful. Because if you look here, we're getting divergence, higher highs in the price action, lower highs on the momentum waves on the trend oscillator here. They're kind of rolling over. We want to see that we're going to hold some support. That's very, very important. Maybe a back test, like I've been mentioning, a backtest of the breakout zone. And if we look at the momentum is diverging as well. Higher highs on the price action, lower highs on the momentum, the purple line. You can see higher highs, lower highs, volatilities oversold. Maybe we get a pop to the upside. Maybe we get some follow through on this divergence. Maybe means risk. So be careful here, guys, because we've done well already on SUI. Now's not the time to take risk on the 4-hour. Basically wait for the 4-hour, maybe the 1-hour, to give us a decent retracement so we can improve our risk to reward ratio. Now, if we get back onto the daily, I can kind of explain what I mean from a statistical probability perspective. If we got in right now, let's get into a long position. We get in right here at this level. Where are you going to put your stop loss, guys? You got to think about it. You got to put it down here, and that's still putting it tight because it could hunt liquidity. We're just going to put it there for now, and we're going to assume, look, where we're going to take profit. We're going to take profit, let's say, at the base of the wedge, which is more or less right around here. Look at your risk to reward. It's 1-to-1, not even 1-to-1, guys. It's pretty bad. And then if you start looking at, okay, we're going to get it to all-time highs. Let's do it. Let's go to all-time highs right around here. Okay, it improves. Now you're at 100% gains, but your risk to reward ratio is not even 2-to-1. So it's not looking good. So you can see that ultimately, if you're going to get in right now, you have to have a long-term perspective. Your perspective has to be basically breakout, price discovery type of scenario to justify an entry here, which would basically give you an extension level potentially hitting about $3 as such. So what we want to understand is, depending on your entry, will depend on your perspective, right? Right now is not a good time to get in. For a trading perspective, for a long-term hold perspective, sure, you're slightly buying the top, and you have to be able to endure a bit of a correction if we do get one. And of course, that's when, the emotions come in. Now, if we do come down for a dip, just a slight dip to the downside, we can drastically improve our risk to reward ratio just by dragging it down and coming down to slightly lower levels to back test this zone right around here, 75 cents. That's the level that we want to focus on. Now, if we can get there, what happens is that you're going to take a 40% loss. I get it. Or maybe a little bit higher. We can start off a little bit higher, right around here, this previous high. We'll take it day by day and kind of track the charts and see what kind of pullback we do get. And most likely, I think that will come down to about 70, between 80 to 70 cents. That's very possible. But again, we're not going to make any predictions. We're going to wait for the momentum to get there, and then we'll pile in when it's appropriate. But what I'm saying is that the risk to reward improves significantly once you drag your average cost down. What we really want to do is pay attention to the loss, because the loss is significant. So 50% loss from even this level if we were able to improve our entry. And the reason why I point this out is because really the position size has to basically consider the fact that you're going to lose potential 50%. So if whatever you get into a trade, just make sure you calculate it that represents no more than 2% of your overall trading portfolio. Okay, so 2% is a decent amount of a loss without taking too much of a loss. And that way you can get in and keep on, playing and keep on finding entries and keep on trading. If you risk too much over time, especially as you, potentially get into losing trades, what happens is that you blow up your account and then you have no more capital to play with. So the intention here is to protect your initial investment as best as possible. And if you're going to take a 50% loss, just make sure that loss represents a very small portion of the entire entire portfolio, because again, if you get in with $100 and you lose, you lose 50%, that's only $50. And if your portfolio is, $1,000, big deal. What's $50, right? Not a big loss, but still it should represent 2% at maximum. So do that math, make sure that makes sense, because right now you're buying pretty much a top. It's on the local time frame. It's not a bottom. You've already got a decent impulse from the bottom, which represents a pretty good move to the upside. All right, guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. See you tonight, 8 p.m. EST, where we talk about crypto news and price action. Take care, have a good one, and don't forget, buy the dip.